Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. S&P currently trading just shy of 4,000, down at 3,993. Reason for this is because yesterday we had Jerome Powell who testified in front of the Senate, and his pre-statement that he had made was very hawkish. Okay, he basically come out and said that rates can now likely go higher than what was initially expected. That's well above their 5% target. And then as well as that, he also said that they could get there a lot quicker than expected, basically indicating that the future rate hikes could be, instead of it being 0.25 basis point hikes, the 0.5 basis point hikes are back on play, basically, meaning that we could potentially see a 0.5 basis point hike in March. And, I think it largely depends on the data that we get this week with the jobs number and, of course, inflation next week. But more so the rate hike in May. I think there's a 72% probability now that the rate hike in May is going to be 0.5 basis points. So it just shows you how hawkish the sentiment is out there right now. But again, I want to draw your attention to the sentiment in the market. Okay, we are very sensitive to every single data point that comes out, and we've kind of just, we're currently trading within this black zone where we haven't had too much economic data as of recent. So it's allowed many investors to kind of twiddle their thumbs, and it's led to this uber hawkishness. So I want to let you all know that, of course, on Friday we had the non-farm payrolls, and I am expecting the numbers to come in significantly lower than last January. Of course, January was a crazy number, more than 500,000 jobs created. So I am anticipating a number to be between 200 to 300,000. So that will signify a big decline in jobs created. And then, of course, next week we have inflation, and there's still many investors out there who believe that inflation is going to come down. I follow a guy called Tom Lee, and Tom Lee, he's known to be a bull in the market, and he basically come out and said that his indicators are showing him that inflation is coming down a lot faster than expected, and January was a bit of a fluke because of the temperature was a lot hotter than expected, and just more the seasonal trends that we have seen, a slowing down in the downfall in inflation. But that is set to resume, and we are set to see inflation fall more. So if we were to get a jobs number on Friday that come in a lot lower than expected, and an inflation number which started to show a more significant decline, then all of a sudden you will see this sensitive market shift from hawkishness back to dovishness, and all of a sudden a 0.25 basis point hike could be back on the cards. And then right now, the AAII sentiment survey, which shows you how bullish and bearish investors are right now in the overall market, is at a very low level, and that basically means that investors are very underexposed to the market. So if we got some of this dovish news come out with the jobs number coming in lower and inflation coming lower, that would then lead to many uninvested investors feeling uninvested, and you could potentially see a trigger for a extremely sharp rally. And also, just to add to that, I want to add that I've just posted some research over in my Telegram group chat with regards to some seasonality cycles that typically occur in March. Now, the 10th trading session of the month in March is when the market typically bottom, so that would indicate next Tuesday or Wednesday, which is quite significant because that's when a CPI reading comes out. But I just want to let you all know that March and April is a very bullish period for the stock market. And although we did give back 50 points yesterday, we haven't done that much damage to the overall rally that has occurred. And we are still trading well within this uptrend that we formed since those October 13th lows, and nothing has really been broken here. So I still like buying the dips here. I still believe that we go and trade back up towards 4,200 before the end of this month. Nothing has really changed. I still hold a buy position, and I see this as a fantastic opportunity to buy this short-term dip in the market.